Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 17th of August 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's kick off with a look at the overnight changes and price moves to be aware of. A calmer session over the last 24 hours on the global foreign exchange markets, and a more measured move. So selective as well, I suppose, is the right word, the adjective to describe the session. There were gains for the dollar. It gained against the Mexican peso, for instance, against the Indian rupee. But there was also a bit of pushback. South African rand gaining 0.38% back against the US dollar after its recent falls, though clearly at 14.66 the rand is still very much on the back foot. Dollar index for its part trading at 96.56 shortly before we recorded the video, down from the day's highs, but only very marginally so. Just coming back to the Indian rupee, that hasn't really had the attention that it probably deserves, down by around 0.24% against the dollar yesterday. It's heading towards record lows. It's down around 2.43% on the month as well. So I'm not saying it's a crisis in India at the moment, far from it, but I think that is a currency on the emerging market spectrum that we should be paying closer attention to. Okay, let's take a look then at what's on the calendar, events that may move the markets today. A relatively compact calendar today, but still one with plenty of data for us to get our teeth into. I wish I could get my teeth in this morning. First of all, we've already had Chinese foreign direct investment data out of the country for the month of July, and actually pretty decent looking figure compared to the prior read. To come, we have a speech from the RBA Assistant Governor Ellis. He's speaking at 7:30 GMT. His speech coming hard on the heels of his boss's speech late last night. At 9 AM GMT, we will have consumer price index data out of the Eurozone for the month of July. The ECB, of course, to my mind, has effectively abandoned inflation targeting, but setting its monetary policy stall out without regard to inflation. But inflation will still matter as a guide to growth and demand, so the market will be looking at that in relation to rates like euro dollar. At 12:30 we have a raft of CPI data out of Canada for the month of July, including the Bank of Canada's own consumer price index data alongside the broader measures. 1400 we'll see the Michigan Consumer Sentiment Index for August released, the closely followed survey, a local one to Michigan, but nonetheless one that's widely followed across the US. And at 1700 we have the influential Baker Hughes US oil rig count. We've seen a build in US supply recently. Once again, I wonder if we'll see an improvement in the number of rigs out working in the USA. Okay then, breaking news and comment that's caught my eye overnight. First of all, gold is on course for its worst week in US dollar terms for more than a year, and the worst in fact since May 2017. Gold hasn't rallied at all during the recent crisis in the emerging markets, and it has caused me to ask, and many other commentators to ask as well, is it now losing its lustre and its attraction to a new generation of investors? Meanwhile, Malaysian GDP has fallen back to 4.5% in the second quarter. That might not sound like such a terrible result, but it is in fact an 18-month low for the figure. The central bank in Malaysia, Bank Negara, is to relax FX restrictions, which it believes may have held exporters in the country back. Meanwhile, RBA Governor Philip Lowe has given a speech in which he says that ongoing probes into the country's banking sector have tightened credit conditions in the country. That probably comes at a time when Australia could do with slightly looser credit conditions to try and drive demand and stimulate growth in the economy. Okay, well, food for thought time, something to take away with you into the trading day and beyond. Why not think about this? New Zealand recently passed new legislation that effectively banned foreigners from buying homes in the country. That sounds extreme until you see a chart like the one opposite. Many Kiwis felt that they were literally being priced out of their own country. Well, the chart here from the World Economic Forum shows its global house price indices. And of course Canada and Britain and to some extent Australia have been notorious for having frothy and sometimes overly active housing markets, but they pale into insignificance when you see the sharp rise in the cost of homes in New Zealand. Picked up in around 2000 and really hasn't looked back since, and far outstripped growth of any of the other economies that we've seen here. So you can have too much of a good thing. You can have too much foreign direct investment, particularly if it's concentrated in one sector, I think is the takeaway from this particular chart. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please contact your Pepperstone account manager. And do take a moment, please, to read this risk warning thoroughly. Thank you for your time.